Hello and welcome. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. Procyon, one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network and everything we do. Green Street Trust International, owned and operated by Rennell Jump and UConn legendary men's basketball player Jake Voskuhl. They specialize in tax plans for businesses large or small. They will save you money or get you a big fat return on your taxes. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, car accident, your mother-in-law ran you over with her car, your wife got angry one night and decided to stab you, the Finch Firm is for you. Pete has won legal battles all across the state of Connecticut. He will go to war to get every dollar you deserve in compensation. You just have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by UConn legendary running back Andre Dixon. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week, 6 a.m. You want to get in shape, you go to Andre. He has an athletic development program where he trains boys and girls in the sport of their choice from the ground up, helps them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state-of-the-art facility in Hartford, Connecticut. Go to www.dynamichumanperformance.com.
All right, and here we are for Luther James Insurance with the man himself, James Whitfield. Great to see you again, sir.
Same here.
And it's been quite the week, and there have been a lot of questions going around, a lot of chaos, and people concerned because they have been relying on the Affordable Care Act. And health insurance is such an issue in this country. It's expensive, and people can't afford to pay for it on their own. If you're not part of a business or a job that covers it for you, you're stuck doing it yourself. And without knowing what to do, without having the Affordable Care Act, there's been a lot of questions and a lot of panic, I would say, going around with people. So, you know, a normal person in their 40s, relatively healthy, doesn't have high blood pressure, any kidney issues, liver issues, and anything like that. What would you recommend being best for them to do?
I mean, you know, the ACA is what it is. It's having its issues because of, I want to say, change of administration, change of who's in charge, or what have you, without naming names and getting us flagged.
It was working before. It was working well before, correct?
It was. It was. And for what, the last 12 or 15 years, the other party who didn't come up with it has been trying to shoot it down. Right. And they pretty much did because they didn't extend the Obamacare tax credits.
Right. Exactly.
So I would suggest I would suggest getting something like a supplemental plan. I do one with a company called One Health. It's a plan that's ran by Cigna. So
Right.
Cigna's
You mentioned that.
a carrier. Yes. It's supposed to be, I believe, 40% cheaper than the ACA. And one of the benefits of it is you can use it out of network. You don't have to be in a particular network. Now you are going to be paying stuff. You are going to pay for stuff, but it's not going to be, I'd rather do it this way than not have some kind of coverage at all. And again, this isn't insurance, but it's backed by an insurance company.
Right. So if you need to see a doctor or a specialist,
yeah,
that's something that you're still going to have to pay for. Yeah,
but it won't be as much.
It won't be as much. Okay.
Yes. Yeah. So you can pretty much see almost anybody on it. It's ran by Cigna.
Do you have to get pre-approval to
No.
see a certain doctor? Nothing like that.
No, not at all.
Oh, okay.
No referrals.
And do you see the Affordable Care Act surviving in the next year or so as they negotiate through this? Or do you see it kind of...
They're trying to phase it out without phasing it out.
Right, without using those words.
Correct. But I believe that whoever runs for office on the next cycle in 3 years, that's going to probably be, healthcare is going to be one of their, if they're smart, healthcare is going to be in their wheelhouse for campaign promises.
Now, the other question was, if they do away with the Affordable Care Act.
Well, it's not affordable.
Are they going to come up with a different plan, do you think?
It's what I'll put it this way. If the other side had a plan, they'd have implemented it
by now
15 years ago. They still don't have a plan, and their plan is to muck up everything. Right.
No, I totally get that. And they have done that very well.
Yes.
They have. We talked a little bit about term life insurance, and that's something that you do not recommend.
Not for permanent life insurance, no.
So somebody asked, is it possible to convert a term life insurance policy into a whole life insurance policy?
It is. You're going to, I put it this way. What they're trying, I guess what this person is trying to do is get something cheap, for right now and then move up. Bite the bullet.
Right.
Bite the bullet, because you'll get comfortable.
Okay.
Yeah, you get comfortable buying something cheap now, and in 10 years, you're not going to be in the same. You're not the same age as you are, and
right.
When you do switch over, it's more. Either which way, it's going to be more. Bite the bullet now, especially if you're at a younger age. Yeah.
That makes complete sense, because people who have term life insurance and say, 10 years
I got $1 million
now,
policy and I'm only paying $69 a month for it. I get that all the time. Yeah. And I said, you don't have $1 million policy that you can access the $1 million.
Right.
You have to die.
Exactly.
For your family that used the $1 million. Yes. And even then, they're going to have a hard time collecting it.
So, another question, somebody who may not be in the best health, they are a diabetic. Their A1C is under control, but they're diabetic. They're
still
they're
qualify.
they're a
The A1C single digits, and it's not 8 or 9.
single digits. Yes,
Yeah, if
right.
it's single digits, if it's not a high single digits, they'll still qualify depending on the carrier.
Okay, and that would still be for whole life insurance.
Yes.
Okay. And what happens if your policy were to lapse in some sense?
You either, depending on who you have the policy with, you would either call the company. If the lapse is like over a couple of months, you're starting over from scratch. Yeah, you're starting over from scratch.
Oh, okay.
Yeah, but if it's like a month or two, depending on who you're insured with, it's possible to pay back the back fees and all that stuff and catch up, and they'll put you on. I've had that happen to a couple of clients.
So we've talked about this before. There's people who want to know, how much life insurance do I need? Is there, because you said obviously to start young.
Yep.
Is there a certain age where you would add on more insurance, like that final expense insurance or any other different coverage?
Well, you would end up getting a separate policy. So
right,
yeah,
exactly.
you end up getting a separate policy. So like what I tell people is, people who get like the high ticket stuff that I offer, don't use it for final expense. Even though like a lot of those policies come with what's called living benefits. So you have critical, chronic, and terminal illness stuff. You get access. You get access to the death benefit if you qualify for one of those conditions. I would still be careful of doing that, because if it's built right, you have millions of dollars in it. Do you want to give away millions of dollars to the facility that you're dealing with? You know what I mean? So you can do a supplemental policy, strictly for, for health. Like if you had to go to a home or something like that, something happens, I would do something separate. I'm not giving away my $15 million policy, to a nursing home or something like that. I wouldn't do it. But I would get a supplemental.
Okay. Christy, you're wonderful. So can you change your beneficiary, and how do you go about doing that?
Just call the insurance company, or if you have an online account, if your account's set up online, you can do it yourself.
Oh, you can. It's just that simple.
Yeah, that's easy.
Oh, all right. So that's not really a big deal. Changing the beneficiary. And if you are married and you don't have a beneficiary, does it automatically
go to each other? It should be each other.
Okay. But if you didn't set it that way, does it automatically go to your spouse?
No.
Or can it be contested? Oh, it doesn't. Okay.
No, because if there's no, first of all, I don't think the company wouldn't let the product the policy be written if there
wasn't a beneficiary.
You have to have some kind of beneficiary. If you don't have a beneficiary, then put it in a trust and assign the trust to your estate, and whoever is in charge of your estate will be the beneficiary of all of that.
Okay.
Other than that, it goes to the insurance company.
Wow. And is that where, because we've seen cases like with Anna Nicole Smith and different things where they believe that she got her 90-year-old husband to sign over the beneficiary to be her under duress.
I don't know.
the
Yeah, it's
probate court
possible.
because of it. Okay.
Yeah, it's possible, but it depends on that person's infrastructure. So, the guy's 90 something years old and he's already loaded. He should have
Yeah.
a really
Yeah.
good lawyer team.
Do you remember that case at all?
I remember it.
Yeah,
Vaguely, but I remember it. Yeah.
She had him like sign it over on a napkin,
That's
and
crazy.
they went to probate court, and
That's what's gonna happen.
I believe she ended it went on for a while, and she ended up winning. It was between her and his son.
Yeah,
and
yeah.
she ended up winning, and
That's
I mean
crazy.
it was just crazy because they both
did she
ended up dying.
That's what I was gonna say. Did she really win?
No. I mean, it's crazy because it ended up with her daughter.
Yep.
Because she had a daughter with somebody else, and it ended up going down to her.
That's bananas.
So what exactly is a life insurance calculator? Do you use it?
No.
Oh, you don't. Okay.
It's a marketing ploy.
Really? That's all it is?
Because you can do a calculator all you want. It's not factoring in your health and age or BMI or medical conditions or anything else like that. When you actually deal with an advisor and they're putting you through a certain carrier or a couple of carriers, that's the price you're going to get, not the calculator price. It might sometimes it works out that way, but it's all right. It's not. It's to me, it's a marketing.
What type of questions does it ask you?
It'll ask you like height, weight. It'll ask you certain questions, but the thing is, it's like if anybody knows anything about credit, when you go to a car dealer, you go to a mortgage broker, and they run your information is going to be different because there's qualifications that a bank or a car dealership are looking for in that person's file. It's the same thing. Because like you'll look at your credit, let's say on freecreditreport.com, and it might say 750.
Right.
Then you actually run your credit at a dealership or a mortgage broker or something like that, and your score comes out lower. It might be like 650 or 700. You're in your mind, hey, it was a 750 here, but when you do third party stuff, it's not. There's no qualifications.
It's not exact.
No.
Okay, I've never even heard of this. What is permanent life insurance policy?
Whole life.
Oh, okay. So it's just whole life. It's just another name for it.
Yeah. Well, it technically is a permanent because it's whole life as long as you're paying for it. Yeah.
If you want to pull up that presentation that you have,
sure,
to show, I'd like to get it to some of these people so they get it.
So the worksheet that I'm showing you guys, it's not for everybody. It's for people who have a certain amount of income. So
correct, right.
For this particular policy, you have to have a net worth of between $2 to $5 million,
right,
or better, right, and have a 6-figure income. Mm-hmm. So with this particular policy, I'm able to finance your retirement, and the return on it is insane because you're leveraging your life insurance.
Mm.
You're leveraging your information for life insurance.
Wow.
Yeah,
okay.
The numbers are insane. So be prepared. Give me 1 second here.
No, that's what people need to see, because people don't understand.
This is the power of
value.
leverage.
Yeah. I mean, the true value of life insurance.
Yep.
And what it provides for you. That it's, everyone, the comments that we've gotten frequently is people always believe life insurance is just, you die and someone gets money.
It's not.
They don't understand that it can provide so many other things.
This is a process that banks use. This is also a process that, got the Rockefellers their fortune. Say they did it
right.
So this particular policy, it collects compounded interest on your money, and it's on an index on the S&P 500. So you're only participating in the gains of the index. So let's say, for argument's sake, you're allowed 10 points. If the market does 100 points, 200 points, you're guaranteed the 10 points. Like that's what you're making on your money.
Okay.
So this is a 38-year-old female. She has a $10 million net worth. She put in some of her own money, and it's to really offset some of the taxes from her 401k.
Right.
So she had money in 401k. So we just took out the 656 and used it for taxes. That's what you see here. So she qualifies for a $5 million loan. We broke it down into payments of $500,000 a year, and we're doing that for 10 years. The cash value for the 10th year is $6 million, right?
Jeez.
That's all she has to contribute, because this is the $5 million. So now we're collecting compounded interest. She's at 10 million at her 19th year. This is what's paid back to the bank. So this is really a 20-year process, which is why I tell people, it's better to be young and do this, because you get a better return. So she's 38, which is still good. She's collecting on average. She's making about she's making almost 6% on average of her money.
Wow.
Right. So by the time she is 65, this is the cash value in her policy.
Right. Jesus.
This is her death benefit right here.
And that doesn't
We're not in it
change.
for the death benefit. We're not in it for the death benefit. We're in it to make money. But if something happens to her, even in the very beginning, something happens to her, her death benefit will be 11 million, 11.7. This is the power of leverage. So if there's any business owners who've got a nice net worth, I can take care of you.
Right. Wow.
And in all honesty, if she has a trust, and this money is still building. This is why a trust is important. By the time she's like 96 years old, there's $138 million in there, and it's going to keep growing. So get a trust and get some, have some trust.
If you do get a trust, even if you die at some point, does this continue? Is that what you're saying?
Yep.
Oh, it does. Okay.
Yep. It's either when you cash out. But if you have a trust, this keeps building. This keeps building.
Keeps growing throughout.
Yeah.
And I just know Rob talks about AUIs a lot. What exactly is an AUI again?
It's what you're getting on your return.
Oh, okay. Okay, got you. So a trust would be separate than this plan, correct?
Correct. Yeah, a trust a trust is, a vehicle where, you put your money in it, and it protects your money from outside vultures.
No, right. So, okay. All right. If you have a trust and you want multiple beneficiaries, is that possible?
Yeah, you can assign. You can
You can.
Yeah. You can assign who you want in there.
Oh. Okay. All right. Well, Chris was right on that one. Okay. And if you were to die with debts, significant debts, would that be required to be paid for by the trust or the policy?
Yeah, because it's the trust is pretty much the estate. You meant AUM, not AUI when you spoke.
I'm sorry.
Assets under management.
Right. Okay. So if you die, you have a car payment, mortgage, whatever, a loan, that policy will pay for it.
Yep. And think about it. Unless you have like $20-30 million in debt, you have more than enough money to pay for
you
stuff.
do. You do.
The money in that is insane.
You do. Now, you did this for people who obviously have a net worth, in the millions.
Yeah.
If people
this person here was a business owner, so it's not like she was an athlete or anything. She's a business owner.
If people have a net worth in the hundreds of thousands of dollars, say three, right. What would? But it's obviously not going to be as lucrative as the.
Well, no. Remember the 26-year-old kid I showed you? I showed that illustration. If you want to, I'll put it up again.
Oh no, you're right. That was right. That was $100,000. That
was $100,000.
You're right.
If you want to see the numbers again, I can put that up.
No, you're right. I forgot about that. You're right. Yeah. So I mean,
at that time, he's 26 years old, so he's got a long time for that money to build up. Yeah.
Right.
Yeah. Because I had it where at 45. With $100,000, he made 6.6 million, and the money still grows because he's not paying for it in 20 years anymore. It's still building. So at retirement age, at 65, he has $22.5 million.
And he has $22.5 million.
Yep.
If he were to take out $1 million,
he'd never miss it.
Okay, so that doesn't change the policy from continuing to grow.
Nope, not at all.
Okay.
Worst case scenario, they take the loan back out of the death benefit. So when you get to this point where you're seeing like $20-30 million, you're still taking it out as a loan. You're not taking the whole $20-30 million out at once. This is why it's called being your own bank. So this is your bank account more than it is a life insurance policy. And I suggest anybody with any sense to do something like this, even on a smaller scale, if they can't afford to do $30,000-$40,000 or something like that. If you had $5,000 to $10,000, you're at a decent age. I'm getting ready to do one for a friend of mine. She doesn't have a lot of money. She has like $30,000 in a 401k that's not doing anything. And I'm like, listen, let me put this to work for you and really do something for you. I got it to where she's got a couple of $100,000 out of it, for her retirement.
Wow. That is
compound
big.
interest. Compound interest.
that is huge right there.
Yeah.
All right, I hate to ask this, but can you explain Medicaid to people who don't really understand it, and when you would qualify for it and what exactly it provides for you?
So Medicaid is it's state issued. It's for people who can't afford. They meet a certain financial requirement. So you can't have $70,000 and get Medicaid.
Correct.
Because
Correct.
the services are pretty much free. Not a lot of doctors are taking them anymore. They're not. They're not. I don't know why. I think it's because they don't want to deal with the state on certain things.
Really?
They're not taking it. There's some doctors who will not take it because they have a hard time collecting from the government. But it's pretty much low income low income insurance. It's from 0 to 64, because at 65 you're supposed to be on Medicare.
That was the next question.
Yeah.
Okay. So Medicare is for 65 and above.
65 and above, and they were taxpayers. So if you're on the system for years, you may not qualify for Medicare. You get some kind of Medicare. Yeah. I think you'll still be on Medicaid at that point because you're an exception. Because you have to pay for your Part D. I think now it's $209. Before it was like $185, and now
right.
Yeah.
Is it possible to have Medicaid and then some type of life insurance?
Yeah.
Or some type of health insurance with that?
Well, if you're at a certain age, so let's say you're 65 or 67, you get what's called a dual plan. So you'll have Medicaid and Medicare together.
Oh, okay.
Yeah, but it's income driven. It's income driven. So yeah, you would get on what's called a DSNP.
And so doctors obviously probably have to jump through hoops to get paid, and that's
some of them complain about it, but you technically you're on Medicare at that point.
Right. But so I can understand why.
Yeah,
they may not typically like it, because it can be difficult to get paid.
Yep.
For them. And that's why you suggested that other plan.
Yes.
For because I mean, people right now are really concerned. They've had the Affordable Care Act.
Let me give you the website on where to get me for that particular insurance.
Okay.
The site is called uplinkinsurance.com. UPLINK, the word insurance.com. Click on the tab that says Medicare agents, and you'll see my picture.
All right. I will put that. I'll make sure to put that in the show notes. Uplink
Insurance. That's a company I work with in Long Island, New York.
Okay, perfect. All right, let me just quickly get our other sponsors out of the way. We will be right back in a second.
Down south, we have Julius Williams and the Trench Mob. Julius trains offensive and defensive linemen. They compete in 5v5 tournaments across the country and also go to college showcase camps. Proud to say they were undefeated at every tournament they attended. Every college showcase camp, a member of the Trench Mob was offered a college scholarship. He's in Decatur, Georgia. If you want to work with the best, work with the Trench Mob, www.battleofthetrenches.com. We have Ned Von Young, Freshfold Laundry Company, Chapel Hill, North Carolina, high-end laundry service. They have you book online. You put your laundry out in a clear plastic bag. They pick it up, wash, dry, fold it for you at Land Speed Records. And they also have an online subscription model, weekly or bi-weekly. They offer now a pickup and delivery service, so you can have your laundry done without leaving the comfort of your own home. Again, washed, dried, and folded for you and returned to you within 48 hours. They also have an expedited service. They have deals for college students in the area as well. Check out their website, myfreshfold-laundry.com. We also have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial planning. He specializes in insurance policies, mainly life insurance. He will make you a boatload of money, and he will do so tax-free. He understands the stress that comes with retirement planning. How much do I need? For how long? Do we have enough? Because fear of the unknown is real. To connect with James, you can go to his website, www.lutherjamesinsurance.com. Finally, we have Rob Hill of R. Hill Enterprises, Inc. Rob is an accomplished author. He is a speaker, and he also is an insurance mastermind, along with being a minister. Rob will put you in the right insurance plan for you. He understands the constraints and the rules that go with insurance, but he makes sure that you ask the right questions so you get the right answers. His main objective is to pull people's heads out of the sand, because that is what we're dealing with currently. To connect with Rob, you can message him on Instagram, LinkedIn, Facebook, or go to his website, rhillenterprisesinc.com. Again, he also does speaking engagements. He is a phenomenal insurance agent out of Chicago, Illinois, and you should contact him for any advice, even if you don't want to work with him. All right. So another question we had was, somebody dies, you're the beneficiary. What do you need exactly to collect on that death benefit? What is there documentation?
Your identification.
Okay.
Yeah, because everything else normally everything else is on the application. So
Okay.
yeah.
Okay. And we've seen certain cases where people get murdered over life insurance policies, where somebody takes out a policy on another person. Is that possible? Like, if I wanted to take a life insurance policy out on Laban,
If you know his information, yeah.
and
suggest you do
even
it,
without
but,
like a health exam or anything like that, I could still pull that off.
Well, I don't want to give the keys to a crime, but
right. No, I saw a couple shows on it, and
yeah, you can do a final expense.
Right. Okay.
Yeah.
But
you're not going to get like $1 million. You're only going to get, depending on the company, depending on the company, $25,000-$35,000, or depending on the company. There's companies that will do an auto. They'll do an auto underwriting.
Right.
But yeah, you can.
Right. And
it sucks, but yeah.
No, I was just surprised by that after talking with you, because I saw a couple shows where either a spouse or a friend took out a policy on somebody else.
Yep.
They didn't know about it. And
technically, it's a crime. It's fraud.
Yes. And they were they faked their signature or whatever, and they ended up being the beneficiary.
Yeah.
And 10 seconds after the person died, they go to collect on it.
Yeah.
And some of them had gotten away with it for a period of time, but eventually were caught.
Yep.
And I was thinking, wow, so I can take a life insurance policy out on my brother if I wanted to, if I know his information, and do something like that, and whatever happens, I could get a payout from it.
Yeah.
That's crazy how that works.
Yeah.
Now, are there policies for people who, besides final death or death insurance, if they have terminal illness, if they have a terminal illness like cancer or something like that, is there any additional coverage that they would be able to get?
Most insurance companies won't pass you with a pre-existing condition.
Correct.
Now,
right.
You can get what's called guaranteed issue insurance because you don't have to take a physical. But here's the caveat to that. For 2 years, that person has to stay alive, because if they die within the 2-year period, they're not going to get the death benefit. They're only going to get the premium that they put in the policy with interest.
Oh, wow. Okay.
Yeah, insurance companies they're not just here to hand out money.
No, I mean, it's a business. Yeah. It's a business. Yeah. It's a business.
I had to do that for my father before he passed away. Like when my
mom
said
that,
I had to do it for my father, and because he was a heavy smoker, and he didn't take care of himself the way he should have. So
correct.
He failed simplified issue or what have you. So he went on guaranteed, and I think we insured him for like $10,000.
Right. Because I remember you said it was barely enough to cover the funeral.
Barely enough. Yeah.
If somebody has a policy through another company, like New York Life, and they want to switch to Fidelity or another company, is that possible to do?
Yeah. So if they were with New York Life for a long period of time and they had whole life insurance, there's some kind of cash value in that. We can 1035 it and then put it into another policy, whatever the cash value is in there, because you don't want that person to lose the money that they already put in.
Oh, Christy, goddamn you! Okay, I didn't know that was right. Okay, yeah.
Is that my girl Christy?
He watches everything. He watches everything. Yeah, he watches every show.
I thought it was the other girl from up there. The one.
Oh no! I gotta get her. I gotta get Crystal. I gotta get her back. I forgot. I keep forgetting to message her. I don't have her number. That's why. So is it possible, if a person has multiple policies, is it possible for life insurers to become suspicious if you're buying several policies without showing a need for them, and the policies could be canceled because of
No,
that?
no.
Okay. No.
So when you sign up for a policy, you have to. I always ask my clients if they have other policies, if they're insured, somewhere else, and if they do, I have to put in the company, and I have to put in, either the account number for the policy, or I just give them a roundabout because I don't want to be that invasive. I figured let them do it, but you can have. Again, life insurance isn't just for paying for something and getting, your beneficiaries get money when you pass away. So if you're doing it for like if you're doing annuities, a lot of people have fixed index annuities nowadays. Annuities is still insurance, even though you don't do a physical. It's still insurance,
Right.
But it's a wealth building platform that offers a death benefit as well. So you can have multiple policies like that. You can also have multiple IULs, as long as you're not in danger of lapsing or anything. They don't care. The insurance companies, they don't care. So you can have as many as you want, as long as you're able to pay for it.
Oh, okay.
And some of them at some point you should just cash out, because it's not doing you anything sitting in the policy. The policy just sitting there doing nothing. Like some people do those Gerber policies for their kids for like $20 when they're a baby, and it's a $10,000 death benefit or whatever. Just cash those things out, especially if your kids are 35.
So people who want to get into the insurance business, if they're in college right now,
Perfect.
Is there a specific major that you would recommend? That
college is going to teach you the insurance game.
You can't major in insurance, right?
You can major in some of the factors of insurance, but
okay.
Yeah, like underwriting and things like that. But you'll learn more of that just being an agent.
Oh, okay.
It's better to be an agent and learn it that way than to pay thousands of dollars in school, because school's always 2 to 3 years behind real world anyway.
Yeah, no, it is. And okay. Is it possible to get like an internship during the summer? If you're interested in working in insurance, is it possible to get an internship or something?
Well, you can't write up anybody. You can't write up anybody.
No. But can you shadow?
You can go around with an agent. Yeah, you can go around with an agent, and
like someone could shadow you if they wanted to.
Yes.
Okay. And that would help them learn the business. It'd almost be like an apprenticeship.
Kind of, yeah, correct. But for me, I don't go out as much.
No.
Yeah.
No. Because
a lot of my stuff I do here on Zoom.
It's completely different, yeah. But they could jump on a Zoom with you and watch and take notes and do stuff like that.
Yeah, if they want to sit in the office, yeah, absolutely.
Okay, I got you. And you mentioned obviously you had worked out of New York. You were getting licensed in Connecticut. You were getting licensed down in Atlanta.
Anywhere in the country. Yeah.
What typically is the price to get licensed?
Well, you have to get depending on your state. So
yeah,
it depends on the state. So I think I think I might have paid $50-$60 for my course, or $79 for the course, or whatever. I forgot. And then I think for New York State, I paid $130 because New York is my resident state. And then I paid $200 for New Jersey. The cheapest state I paid for to date is probably Michigan, because I think Michigan was like $10.
Oh, wow. Really?
Yeah.
10 bucks.
$10.
You can't beat that.
And I don't even have to renew it. It's like active for as long as I'm an agent, because you got to renew your licenses every year. Well, not every year, but every couple of years.
Every couple of years, you do have to renew your license.
Yep.
You
gotta take testing and all that stuff.
What does that entail?
It all depends. Some of the questions are generic. Some of the questions might be specific depending on the state. They just want to make sure that you stay compliant.
Oh, okay.
Yeah.
I got you.
Like for New York, I constantly have to do, like, it's almost every year, but it's really every 2 years. I always have to do. I always have to renew a particular test because of the IULs and stuff that I do. You know, the bigger policies that I do.
Right.
I have to be in constant compliance with that, especially for New York, because it's my resident state.
Right. Oh, New York. New York is your resident state.
Yeah. I hate selling insurance here, but yeah.
Because you said that before. New York is not as lucrative as other states for insurance.
Correct.
Okay.
New York and I think California.
And so that's why getting people in Connecticut would be more beneficial.
Oh yeah.
For you than doing it in New York.
Anywhere but New York. Anywhere but New York.
Anywhere but New York. I got you.
And California. Because
Okay.
California is an expensive license. I think it's like $400 or something like that, $400 or $500. Illinois is expensive too.
Oh my God! Really?
Yeah, it's expensive.
Oh my God! So your life insurance policy technically never expires, correct? It automatically renews.
If you have money in the bank, yeah, as long as you're paying for it. Now, there's a couple of ways of doing it. I always suggest people just do the yearly as opposed to doing the monthly, because or in some cases just do it quarterly.
Yes, you said that. Yes.
Yeah. If you don't have it yearly or monthly, I mean, sometimes it's better to do it quarterly. You're paying it every 3 months as opposed to every month, so it's not a bill. You know what I mean? But I like to get it out the way. Now, not everyone has, if they're doing a high value policy, not everyone has a big sum of money. But I never, for doing a bigger policy, I never do them. But I never do it by the month. They have to have some kind of way to pay off the premium for the year, because it's too much at stake.
All right. Well, James, great job. Great show today. Great audience. We appreciate you answering the questions, especially about the Affordable Care Act, which everyone's in a panic about, and giving an alternative. And I have that website, uplinkinsurance.com. I will make sure to put that in the show notes so people know they can go there to connect with you.
Yeah, they want to click on where it says enroll here.
It's got your picture.
Yeah, for One Health Individual and Family Cigna PPO. That's the link. That's the link that they want to click on.
Okay.
And I'll send you a screenshot.
All right. I will do that for sure. So for James Whitfield, Luther James Insurance, I am Steve Cully, the best podcast host in the universe. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them right back at life.